Good morning, folks. Well, we got the number. Existing home sales came in and it is a doozy. It's pretty clear to me that the real estate market, the housing market is going exactly how you and I have talked about. Hopefully you've been doing the work, you've been getting prepared for what is going on because again, when transactions slow and inventory builds, the opportunity to create great deals greatly increases, whether that be on price and or terms. This is what I have been saying ad nauseum for the last 3 to 6 months. In fact, we're going to take some victory laps today because, again, I get a lot of hate on YouTube from the Crash Bros and all of their fans. Their fans are really upset with me. So if you remember in the last 60 days or so, I warned or I guessed or I prognosticated that existing home sales would likely take out the bottom. I've talked for a great time about the bottom currently being at 3.88 million. I still think that is coming. In fact, it might report in 30 days. Why do I say that? Well, existing home sales crashed, fell, collapsed 5.4% month on month. The estimate was to be down 3%. Prior month was down -7%. So we are clearly, as I had been indicated, seeing demand, marginal demand at the edges pull back. Again, it is my belief that the recession will be once calculated, tagged as either June or July of 2024. And with existing home sales being down 5%, 5.4%, I am feeling better and better about that call. Again, the actual numbers came in at 3.89. Again, the record low is 3.88. Almost got there this month. I think we get there next month. Buyers are like, no mas, I'm out. You know, we're going to watch this crazy election. Maybe they're nervous about their jobs. Who knows? But you're not signing up for your largest payment in an environment like this. So again, I think that call from a month to 6 weeks ago is once again going to be proven right. Came in at 3.89, expected 3.99. Prior was 4.11. Now for the all-important price. This one really blows people's minds. A lot of people believe, inaccurately, that when transactions crash, price must follow. In fact, I have been trying to educate the world, specifically Crash Bros and their followers, that folks, you do not understand how to calculate median price. So let's give you the numbers and remind you why it happened. Median home price up 4.1% year on year to a new record. Yes, a new record. Hard to have a crash when you have new value or new record. So the new record is $426,900. Wow, that does not sound like a crash. So why would this happen? Why would this happen? Remember, folks, median. Take the lowest transaction to the highest price and you find the middle. As I have been trying to help you understand for 2 years now, if you take this normal market and you realize that the Fed broke the housing market, what happened? Well, you're going to get a lot less low-end transactions. You're going to start to get inventory to build at the high end. And just given the mix, the change, the mix of what's transacting, it will pull the median price higher. It's that simple. You can get frustrated that your Crash Bro is wrong again, but maybe you should understand how the median home price is calculated. For example, and I told you this was coming, the only market, right, price points, the only price points to see transactions increase last month was homes over $1 million. The biggest drop in transactions were homes under 250K. So if you remove the low end and you transact more high end, what happens? The median moves. And I'm sorry if that frustrates you, but that's just how math works. So a couple other things we've noticed is inventory is up. Inventory is up 23.4%. Again, it's the high end, not the low end. Supply is weakest at the low end. So supply is weakest at the low end. Inventory is building at the high end. What happens going forward? Well, I think you know. Couple of numbers inside the numbers. 28% of homes were all cash. Think about that. Let's just call it 4 million, which would be the run rate, right? 4 million rate. It was actually 3.89. I'm going to do easier math at 4 million. That means over 1 million, right? The run rate of over 1 million transactions were all cash. There's still plenty of cash on the sidelines. And why is that important? They don't care about rates. They simply don't care about interest rates. Also important, investors. Investors are finding it very hard to get deals done. 16% of transactions were to investors, where last year it was 18%. So what does that mean? Well, I hope what it means is first-time home buyers are getting an opportunity to buy. So the other thing we saw inside the numbers is months of supply is now over 4 months. I believe it was 4.2. It might have been 4.1. I think it was 4.2. I'm going to call it right now. We have entered a buyer's market. I know there's this long historical thing about, hey, 6 months is a normal market. I believe that is outdated. I believe that is something that real estate agents and brokers say just because they don't want to admit that the transaction cycle has shrunk. This was back when you were literally sending, FedEx packages around to sign stuff. The process to buy homes is far more efficient. So I'm calling it right now. We are over 4 months of supply. We are now in a buyer's market. So, does anything change? No. We keep doing the work. We keep looking for motivated sellers. We keep looking at days on market. We keep looking for seller finance. We keep doing what we do, and our chances go up. If you use the sliding scale of 1 to 100, in my opinion, trying to find a motivated seller in 2021, 2022 was nearly impossible. Let's call it a 3 out of 100. At the beginning of 2024, where inventory was starting to build, rates were 7.25. It was probably a 15. Again, 500% better than before, but still way below, way down. Where we are now at the end of July 2024, we are probably over 50. We are probably at a 55, maybe a 60. So again, they're not everywhere. They will never be everywhere, but it is getting easier and easier. And the good news is, I think it will be easier in August, and easier in September, and easier in October. I believe, again, as I've said, that transactions will be slow the remainder of the year, and it is our opportunity. It is our mandate to find and or create great deals. This is when wealth is built. You do not build wealth on the sidelines. Doing nothing and keeping your head in the ground and praying to the God of home price crashes is not the thing to do. Go take ownership of your life, do the work, figure out what average is, go get yourself a great deal. So again, existing home sales crash, down 5.4%. Prices, not so much, up 4.1%. All right, so what else is going on? We've got some very interesting earnings to talk about. We'll start with UPS. UPS was something I highlighted on Sunday that I would be looking at today, and woo, that was an ugly number. They missed top line, they missed bottom line, and they lowered guidance. Yes, folks, it looks like UPS is saying we are having a global freight recession. So when I see headlines like that, I ask, what does it mean? Well, I think it means we're buying less junk, right? When I think of freight, that's containers, right? That's big things. So again, back to my feeling about June and or July being called the start of the recession. Again, this call won't come until Q1 of next year. But again, a global freight recession seems pretty reasonable. Let's flip the script to GM, right? General Motors. They actually beat top line, beat bottom line. The average transaction is 50 grand. Wow. The average transaction is 50 grand. Noted that GM is going to be restructuring the China business. Again, they've been struggling in China. But yes, GM beat top line, beat bottom line, which makes me wonder what's going on. Maybe my recession call is wrong. If we are buying more and more cars, maybe I'm wrong, which again, as you know, I am wrong all the time. So there you go. How about Coca-Cola? They actually beat top line, beat bottom line, and raised full year guidance as global demand rises. Coca-Cola is one of those companies I look at as kind of like an early indicator, right? Coca-Cola is one of those things that's like a little treat, right? Oh, instead of getting water, I'll get a Coke. So it's interesting. Does Coca-Cola, is it like, hey, maybe the consumer, again, is feeling better. Maybe the rest of the world is feeling better. I don't know. Too early to tell. But again, Coca-Cola was up. I don't know if you saw this, but it looks like Porsche. Is it Porsche or Porsche? I don't know. One of those. Porsche or Porsche has cut 2024 outlook, not because of demand, but because of supply. Apparently, one of their suppliers was flooded, and there is a real shortage of special aluminum alloys. Don't really know what that means, but it sounds like they can't make as many cars as they want, so they have cut outlook. Don't know if you're in the crypto area, but congratulations if you are. It looks like you have your second ETF. ETF for Ethereum has now started trading, so that joins the Bitcoin ETF. Some people say Bitcoin is gold and Ethereum is silver. I have no idea. Both. I bought them as insurance policies in 2018. I have no intention of selling, but hey, we've got 2 ETFs, which will likely bring some liquidity, I would guess. On the commodities front, I don't know if you're watching it, but it's something I look at casually. Looks like oil is down at its lowest number in the last month, which is interesting given what's going on in the Middle East, the risk of a flare-up. Apparently, oil is saying not a problem. Also, the uneducated economist continues to remind us about crashing lumber prices, likely mill curtailment and the like. I just look at that and think, oh my goodness, are we going to do the same thing as a couple of years ago? We're going to take lumber supply down to bare minimum. Interest rates will be cut. Demand will increase. And bingo bango, we have no lumber. Yeah, that's a fear of mine. I don't like repeating mistakes. If you are part of the school community, I want to remind you we did do a Zuber Q&A or coffee talk yesterday. We talked about IRS tax audits. We talked about new construction, seller financing, ADUs, affordable housing, and much, much more. The replay is already available. If you go inside school to classroom, and if you scroll to the bottom, there's a thumbnail that says, I think it says Zuber Q&A or something like that. If you want to go watch the replay, it is there for you already. It is only available on school. That is not on YouTube. That said, though, I will be going live at 8 a.m., so about 15 minutes. I'm going to go to YouTube. I'm going to go live inside YouTube. The one and only Anna Kelly is returning from a trip in Europe, so she is unable to go this morning. So I thought, what the heck? Let's go live on YouTube. And what I'm going to do is I'm going to talk about, at least I'm going to start with, what would I do today starting over? This is a question Warren Buffett got in 1999 at his gathering, and he gave a very eloquent answer. So I'm going to share that answer with you. I will agree with that answer and then give you the step by step. So there we go, folks. If you want to be a part of the live, I will open with that. It'll probably go 10 to 15 minutes. And then if I have anybody watching, I will spend up to 9 o'clock just answering questions. I hope to see you there. Have some fun. Like, subscribe, comment. Don't forget to become part of school. The next calendar meeting is tomorrow, I believe at 6 o'clock Pacific. It is accountability group time. Come join, introduce yourself, ask questions, meet other investors going the same direction. The community is already over 200 members and growing. This is when I think it starts to really build on itself, get interactions and all of that. So join school, get around other people doing the work, realize we just entered a buyer's market, and it is your job, it is your responsibility to simply do the work. Later.